One of the biggest illusions banks sell us is that our money grows in our bank accounts. The truth is that while the balance increases due to interest, the real value of the money doesn't, especially with inflation on the rise and bank interest rates falling. Keeping money in the bank is actually eroding its purchasing power. In this video, we'll present 6 assets that can protect your wealth from erosion and help build intergenerational wealth. Let's start with God's money: gold, silver, and platinum. Money is valuable because it is used to store value for the future. However, governments today are printing more money to finance their deficits, which can quickly devalue paper money. That's why financial experts recommend investing in something valuable and scarce that can't be created easily. This is the main reason why the rich always have a part of their portfolios invested in precious metals. Metals such as gold, silver, and platinum tend to increase in value when inflation soars. Before the 1950s, an ounce of gold cost around $400. By 2023, that same ounce was worth more than $2,000, and according to Prime XBT forecasts, it could reach $10,000 by 2032. In approximately 10 years, your gold investments could increase 5-fold, while the value of money continues to fall. Other precious metals are also better than keeping cash in the bank. If you're wondering how to add gold to your portfolio without buying physical gold, you can invest in gold ETFs. These funds are affordable and offer returns based on gold price movements, without the need to store physical gold. Now let's talk about industrial commodities. Scarcity is one of the reasons why precious metals are valuable, but they also have practical uses, making them indispensable industrial commodities. For example, silver is used in the manufacture of medical equipment, nuclear reactors, and electronics. Other metals, such as cobalt, nickel, and copper, are in high industrial demand due to their unique properties that cannot be easily replaced by alternative materials. Since 2020, demand for cobalt, used in the production of batteries for electric vehicles, has increased significantly. Its prices have risen from $20,000 per ton in 2012 to $40,000 in 2022, a 100% increase in just 10 years. Having exposure to these raw materials can significantly increase the value of your portfolio in periods of high industrial demand. Investing in industrial commodities, investing in high-demand commodities is a smart strategy, but not everyone can allocate large sums of money to acquiring raw materials. In addition, physically storing them and finding the right buyers can be challenging. Therefore, a viable alternative is to invest in shares in mining companies, such as Rio Tinto, or in mutual funds focused on mining. Another option is to use derivatives, such as futures and options, which are great ways to gain exposure to these markets without the need to physically handle the materials. Safe haven currencies. In today's fiat currency landscape, where no currency is backed by gold anymore, geopolitical stability becomes a crucial factor when investing. For this reason, many wealthy people keep their money in Swiss banks. Switzerland has one of the strongest economic systems in the world, offering a very stable geopolitical environment. The Swiss franc is considered a safe haven asset in times of turbulence and instability. This was seen during the Eurozone debt crisis in 2009 and the global financial crisis of 2008, when significant funds were transferred to Switzerland to prevent the erosion of wealth due to the devaluation of the currency. The Swiss franc also acts as a valuable alternative to the US dollar in international trade. During the recent crisis between Russia and Ukraine, when the US imposed sanctions on Russian energy trade, Russia traded in Swiss francs. Such events increased demand for this currency, leading to its appreciation. At the beginning of 2023, 1 Swiss franc reached $1.1074, causing Swiss franc holders to multiply their wealth rapidly. Therefore, superior currencies such as the Swiss franc, the British pound, and the Chinese yuan are excellent stores of value. However, since not everyone can open Swiss bank accounts, currency ETFs and forex brokers such as Forex.com, allow small investors to gain currency exposure with as little as $100. Sovereign guarantee. Have you ever looked closely at the dollar and wondered what makes it valuable? Since 1971, when President Nixon abolished the gold standard, the dollar has become legal tender under U.S. law. This made it valuable as a medium of exchange, and it began to be considered a proportionate form of reimbursement for any good or service. Although no fiat currency in the world is backed by gold or any other physical asset, they are backed by the full faith and credit of governments. In simple terms, your money is only as stable as the government that backs it. Investing in sovereign guarantees is a valuable form of store of value, as the government of any nation is always the last to default. If the government defaults, the whole nation will be affected, and no strong government will let that happen. One of the safest ways to invest in sovereign guarantees is through government bonds or T-bonds. Investing in sovereign guarantees and value stocks. Sovereign guarantees. Investing in sovereign guarantees is a recommended strategy, especially in stable government bonds with investment-grade credit ratings. Remember the 2009 sovereign debt crisis in Greece, when the IMF, Eurogroup, and ECB had to rescue the country several times. The overall strength of a government should always be considered when investing in sovereign guarantees. In the US, you can invest in treasury bonds, notes, and bonds to get exposure to these assets. They offer better returns than keeping money in the bank and are backed by the US government's economic strength on the global stage. Small investors can buy treasury bonds directly from the government through the Treasury Direct portal or the secondary market. These investments are a safe and effective way to protect and grow your capital while benefiting from the stability and support of the American economy. Value stocks and mutual funds, investments in treasury bonds, certainly provide better returns than keeping money idle in the bank. However, due to their low risk, these returns are generally lower than those of stocks. Although low risk is a crucial criterion for risk-averse investors, most investors seek higher returns, and stocks are a great way to achieve this. Not all shares are equally risky. The stock market is broadly divided into two types: value stocks and growth stocks. Growth stocks, such as those of technology companies, are riskier due to the high potential for new ideas and technologies to fail. In contrast, value stocks, such as those of companies trading in industrial metals, are less risky due to established demand in the foreseeable future. Value stocks with solid fundamentals not only provide stability and constant appreciation, but also offer stable dividends. However, researching the fundamentals of each stock can be time-consuming and complicated for average investors. Therefore, dividend-focused mutual funds, such as the Vanguard High Dividend Yield Index Fund, Admiral shares, which have a stable track record of paying dividends, are ideal and affordable investment vehicles for retail investors. Investments in land and real estate. Land is considered a non-depreciable asset for a very good reason. It is scarce and always in demand. Since the dawn of mankind, land has been one of the world's most valuable resources. We need land to build houses, schools, factories, agricultural and commercial spaces, among others. With a growing world population, the demand for land will never decrease. Likewise, residential real estate, commercial space, and offices built on land are also always in high demand. Both land and real estate act as excellent hedges against inflation in an investment portfolio. Looking at some figures, according to a Bloomberg study, housing prices tripled between 1992 and 2020, despite the big drop during the 2008 housing bubble. Therefore, having exposure to the real estate market is always a sound strategy. Investing in land and real estate can provide not only capital appreciation, but also a steady source of passive income, either through renting or selling appreciated properties in the future. Real estate investments and high-value collectibles. Real estate investments. Investing in real estate is an excellent strategy for protecting your assets when the dollar begins to lose value. However, many small investors don't consider entering the real estate market until later in life, often thinking only about the house they live in. Although owning a fully paid-off home is an important net worth goal, especially when you're in your 40s, it's recommended to have a slice of the real estate market at all ages. Contrary to popular belief that you need a lot of money to invest in real estate, there are affordable alternatives, such as REITs, real estate investment trusts. REITs work in a similar way to mutual funds, but focus on real estate. One of the most popular REITs in the US is Ventus Inc., VTR, which invests in healthcare real estate, including research facilities for the elderly and hospitals. Another option is to finance the purchase of rental properties, where the rents received can cover expenses and mortgage payments, as well as generating a profit. High-value collectibles, investing in collectibles such as vintage cars, rare pieces of art, handcrafted luxury handbags, limited edition watches, and even first editions of iconic books can be a lucrative way to diversify your portfolio. Unlike ordinary cars, which lose value as soon as they leave the dealership, vintage cars increase in value over time, similar to wine. For example, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was sold in 2022 for an impressive 135 million euros. Only 2 of these cars were ever produced, making them extremely rare and desired by car collectors. Similarly, Leonardo da Vinci's controversial painting Salvator Mundi was bought for $450 million at a Christie's auction in 2017 by a Saudi prince. The wealthy spend significant amounts on limited edition products because these unique pieces are timeless repositories of value and can fetch unimaginably high prices if you find the right buyer. For average investors, investing in collectibles can seem like a distant dream. However, there are viable alternatives. Online marketplaces like eBay are great options for selling collectibles such as rare baseball cards, comics, and action figures. And if you can't afford to buy an entire item, you can invest in partial ownership of collectibles on platforms like Rally and Masterworks, allowing you to participate in the high-value collectibles market in an affordable way. Conclusion: investing in diversified assets such as real estate, valuable stocks, and collectibles is a robust strategy for protecting and growing your wealth. Each of these assets offers unique ways to mitigate risks and boost returns, ensuring a more balanced and resilient portfolio.